No. All right. Hello, everybody. Jeff Gibby here at Metastock. I hope you're doing well today. Happy Friday. Hope you're having a good time. I hope you're enjoying summer. Let's go ahead and read this very, very impressive legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Now, there are a couple things I do want to say about this before we kind of get started. We will be looking at a lot of stocks and giving our opinions on kind of whether we like them and whether we don't like them and things like that. We're not recommending that you buy them. A lot of the stocks we look at, we might have positions in, or we may have positions in, but we don't know what your risk tolerances are. We don't know kind of what your trading style is. We don't know what your time frames are. So you should look at everything that we talked today with a big grain of salt. We're not giving you recommendations for buy and sell, period. But we will tell you if we like a stock. So there you go there. The presenter we have today is a gentleman by the name of Sagar Nandi. He does such a good job with these. I've heard really, really good things. One of the things, I haven't actually ever hosted him with one, but I've heard he does a really good job when we have him in here. One of the things I've been very, very impressed with Sagar in particular is his spreadsheets. He's an Excel master. It seems like he has a very, very good approach to kind of the market from a broader perspective. And so I'm very, very interested to see how he does today, see what he's got to say. And I'm sure he's going to do a great job. But I've seen some of his spreadsheets, and I'm curious to kind of get a closer look under the hood. So, Sagar, that's my introduction to you. I hope you're doing well. How are you? Well, let's just ask you, how you doing today, Sagar?
I'm doing fine, Jeffrey. How are you doing?
I'm good. I know you're going to share your screen quite a bit. We had a pretty bullish day in the market today. Here's your legal disclaimer. So,
okay.
So let's go ahead and kind of get into it.
Yes, let's start with this one. This demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. And that is the only slide that I'm going to use. As Jeff mentioned, today is a bullish day. Let's start with that. What do you think, Jeff?
I generally have, well, I generally, like today, we had a bit of a dip down a couple of days ago. I particularly, I was happy that it was bullish. What are your thoughts on the market right now?
Let us, I have my thoughts, you have your thought, and everybody has their own thoughts, but let us look at what the market is showing us. And
absolutely.
From certain angles, of course, it is bullish. From another angles, it may be bullish, but not so bullish. But finally, we let the system tell us based on data-driven approach what it is telling us. Now, I'm going to look at the market, which is the most important part of trading in my view. If we are right on the market, trading becomes easier. If we are wrong on the market, but right on the stock, trading becomes difficult. So I'm going to spend more time on looking at the market, and I'll of course be happy to look at stocks also. And while I am looking at the market from different angles, I will explain a little bit what I'm looking at. In the past webinars that I had with Metastock, I didn't always explain in detail what I was looking at, and there are many things I'm going to look at, so I will briefly describe them. Now, if anybody is interested to know more detail, they may visit www.sagarnandi.com to look at the detail. First thing I'm going to look at is look at the market ETFs. I could use market futures or market indices. I'm using, of course, Metastock and Q Global add-on running on Metastock. Currently, I'm looking at a chart of DIA, Dow Jones Industrial Average ETF. As is my usual practice, I look at it using dual time frames, weekly and daily. What we are seeing here for DIA, that it is in a clear uptrend in the weekly chart. There is no doubt about it. There is trend line support, automatically drawn trend line support, and the candle color is also bullish. In all the charts I am going to show, green and cyan is bullish. Not only charts, even in fundamental analysis, industry sector rotation analysis, anytime you see cyan or green color, it is bullish. Magenta or red, it is bearish. Yellow is neutral. So we have a very bullish week this week. It stopped right below the previous all-time high. This band indicator is showing it is at price extreme high. Of course, it is at price extreme high because it is going up in a nice angle, around 45-degree angle. Weekly is bullish. What about daily? If we look at daily in the recent couple of weeks, it is in fact moving sideways. It's bound by watermark resistance at the top, watermark support at the bottom. It's inside what you may call a box pattern. And now it is at the right at the upper edge of the box. So weekly is bullish, daily is in a box and at the upper edge of the box. So if we think of trading setup, what are we going to do at this point? We don't like to buy. I don't like to buy at the upper edge of a range. I would have bought at the lower edge of the range here or here. But at upper edge of the range, I would rather like to book profit. So I'm touching on two thoughts. One is it is bullish or bearish or neutral. It is bullish. And the second thought is there a low risk buying opportunity or shorting opportunity? My conclusion is for DIA, it is bullish, but we don't have a low risk buying opportunity right now because it is at the upper edge of a sideways range. Let's now look at NASDAQ.
Oh,
yes,
I'm sorry.
Jeff.
I was wondering if you would consider buying on the top of on a breakout of the box. Is that something that you would consider doing? And if so, what would you be looking for to trigger a long position? So kind of a multi-part question there, but do you ever consider buying a breakout of a box like that?
I like to trade breakouts, Jeff, only when the breakout gives me a low risk buying opportunity.
Okay.
I am a
so
swing
maybe
trader.
You might wait for. I'm sorry.
Yes.
Go ahead.
Yes.
I'm sorry,
because I'm a swing trader, I try to catch the swing lows.
Okay. So
now,
you might,
I do take breakout. If it breaks out, I have to decide where to put the stop. If the stop is so far away, I'm not going to take it. But if there happens to be a gap up day, then there is a technique and approach, generally recognized approach, that if there is a gap up candle that breaks out of the range, then one may buy on the next day if price goes above the high of the breakout and gap candle. And in that case, it is possible to put stop just below the gap up candle's low. In that case, the stop will not be very far. But if I have to use the swing low for stop, that will be very far. So if there is a gap up, I may use that technique to take a trade or breakout. But if there is no gap up, then I may wait for price to pull back and then go up again.
Okay. Thank you. I appreciate your answering that for me.
My pleasure. Okay, weekly, daily reversed. Let me open again. Let's look at the market ETFs, and that will be only one part of my market analysis. Now, looking at NASDAQ ETF. Similar to Dia, QQQ is also bullish in color, bullish in shape, in a clear uptrend, has trend line support in weekly. On top of that, it made a new all-time high today. On top of that, it displayed a bullish reversal candle. That is, the week's low is below previous week's low, but week's close is above previous week's high. That creates a bullish reversal candle at price extreme high. It is also at price extreme high, but it is more bullish than Dia because it made a new all-time high, and also because it has a bullish reversal weekly candle. In the daily also, it is not in a range. It doesn't have resistance. It only has support. Now the swing low was at this point, the yellow candle, or maybe the first green candle after that. Price has gone up for 4 days in a row from the swing low, which was the red candle. So for those people like me who like to buy at swing low, they would have bought at the trend line support. Now it is a bit far for swing trading. We don't have a low risk entry opportunity here. The opportunity was 3 or 4 days ago. It is bullish, but not at swing low to give a low risk entry. Let's look at SPY. SPY, S&P 500 ETF, is also bullish, going in an uptrend, has trend line support, bullish color, bullish shape in weekly, created a new all-time high today, and like QQQ, displayed a bullish reversal candle at price extreme high. Daily is in an uptrend. The swing low was at this point where the trend line support was there. Now it is already up for 1, 2, 3, 4 days in a row. Little bit too extended to buy in my style. My style in meaning those who prefer to buy at swing low. So it is bullish, but the low risk entry opportunity was on this day. Incidentally, right on this day when price hit the trend line support, it did so not only for SPY. If we go back to QQQ, it hit the trend line support in QQQ also. The trend lines were already there at that point. And if I go back to Dia, it hit the trend line support in Dia also. So looking at price finding support in 3 of the 4 major ETFs, one could start to buy from that point. All of these are in an uptrend in weekly. Dia is in a box in daily. QQQ SPY in uptrend in daily also, and Russell 2000, the small cap ETF, this is not in an uptrend. For short-term trading purposes, the weekly is also moving sideways and daily is also moving sideways. For longer term period, it has this automatic trend line support, but for several months now, it is moving sideways. So now we are able to answer the question, is market bullish or bearish? If we are thinking of large cap tech stocks, it is very bullish. For large cap stocks in general, S&P 500 is also bullish. Industrials, in the daily time frame, it is sideways, and small cap, both in weekly and daily time frames, it is moving sideways. That is what we can see from the market ETFs. This is what we can say. We are examining the symptoms of the markets, what it is displaying outwardly. Now, if I want to look inside the market using a stethoscope, I can do that using the breadth calculations that are available in Q systems. They are using the data from Zenith and using an aggregator called Fire. Fire is provided by Metastock, and Q aggregates the data using Fire and does some more calculation. Just now I showed that QQQ is stronger than all the other ETFs. Does it mean technology as a whole is stronger than non-tech stocks? Or in other words, is NASDAQ as a whole more strong than NYSE, for example? Let's find that out. So we are now looking at composites, looking inside the market, not just at the ETFs or futures. So now I'm looking at market breadth using NASDAQ as a whole and NYSE as a whole. And there are several plots. I will go through at least some of them. Let's start with the yellow line here. This is percentage of stocks above 50-day moving average. 50-day moving average is one of the major moving averages used by many traders. And it is accepted that we may look at the percentage of stocks above 50-day moving average in aggregate for the whole exchange to show whether the exchange as a whole, so in this case NASDAQ Technology Exchange, is it becoming bullish or bearish in recent days. I couldn't run the aggregator today. Up to yesterday, if you see the yellow line, what is the yellow line again? It is percentage of stocks above 50-day moving average for NASDAQ as a whole. It is in fact coming down with lower high, lower low from here. And if you want to go back, it's coming down from earlier period also, but certainly from this period, which is from early June. So from early June to now, that is 23rd of July, though QQQ is going up steadily, making new all-time highs, even today made a new all-time high, but NASDAQ as a whole is not so strong. It is in fact coming down. Again, I didn't aggregate for today, but I don't think it will change the trend sharply, suddenly by one day's movement. So NASDAQ as a whole is not so strong. What is the exact percentage? Let's check that out. 33.9%, let's say 34% of NASDAQ stocks are above respective 50-day moving average. What is that percentage for NYSE? The yellow line here, it is actually 38.6. So there we see some difference between what the ETFs are showing and what the internal health of the market is showing. Internally, we see NASDAQ is actually weaker. The percentage of stocks above 50 MA is below the percentage of stocks below 50 MA for NYSE. Both are coming down, by the way. Both are coming down with lower high, lower low. That shows under the hood, the market is not really as strong as QQQ or DIA or SPY would make us believe. That is important to know, because QQQ is making new all-time high doesn't mean all the stocks we are buying or you are buying, I am buying, they are going up. We have to be aware that many stocks are in fact coming down, and we have to choose the stocks that are going up. Making a general statement looking at SPY, QQQ, DIA that market is bullish is not enough. I will not look at the white lines in detail, but that is the percentage of stocks above 200 MA. That is slower than the yellow line, but that is also gradually coming down again since early June. So gradually the market is showing some weakness inside. There are other calculations for that. I'll not have time today. Instead of looking at the composites, now let us look at the market using what I find extremely useful, market breadth total view. And this total view is calculated using many different perspectives, looking at NASDAQ as a whole, NYSE as a whole, those two composites, and then looking at four major indices, S&P 1500, 500, NASDAQ 100, Dow Jones Industrials. Again, if we look at the yellow line, percentage of stocks above 50 MA in aggregate for the two composites, four major indices, that is in fact also gradually coming down. Current percentage is around 45%. So it is below 50%. From that angle, it is not bullish. It is below the dotted line, that is the average line. From that angle also, it is not bullish. Coming down with lower high, lower low, from that angle also, it is not bullish. So market breadth total view, looking at two composites, four major indices, is not bullish. On the other hand, if we now look at the counts here, the green counts or any count that is appearing on top of the candle chart is not important. We are reading the accumulation and distribution counts in aggregate. Any number coming on top of the candles are accumulation counts. Any number coming below the candles are distribution counts. Though there is gradual weakness seen from the yellow line, means stocks are gradually moving below their 50-day moving averages, we see that the selling is not with high volume. In fact, not much high volume selling is there in recent days. If we look back, we try to find distribution days. We have one here. The last one was in early June. Since then, we only had one distribution count. That was Monday this week. The sharp drop was there, distribution count. And after that, we in fact have accumulation count. Sometimes my drawing tool gives me problem. We have accumulation count of 2 on Tuesday and accumulation count of 1 on Wednesday. Where from did they come? The two accumulations were from, let's check that out, were from NYAC and S&P 1500. Those were the two accumulation counts of Tuesday. Wednesday had accumulation count from NASDAQ as a whole. So we had accumulation counts on Tuesday, Wednesday both, and now we see they are from broad indices, either NASDAQ as a whole, NYSE as a whole, or S&P 1500, which is also broad, not from S&P 500, NASDAQ 100, or Dow Jones Industrials. That is, until today, the recovery from Monday's low was driven not by mega cap, large cap stocks, but by broad market. Today, things might have changed. We'll try to look at that also. So what does it mean? That means when we had recovery from the swing low, and we saw at that point we had trendline support in many market ETFs, we could start to buy stocks. What kind of stocks would we buy? We could look at the accumulation count and see the strength was in fact in broad market more than mega caps. So we could start to buy non-mega caps from Tuesday onward, and then price has gone up. That is one way to decide whether to identify trades from, for example, constituents of NASDAQ 100 or constituents of Dow Jones Industrials, or look at broader picture S&P 1500 and try to find trades from there. The other thing that we may also note that it happens quite often, and nowadays it is happening more and more. Sometimes growth is in vogue, sometimes value, sometimes small cap, sometimes large cap. Which one to look at for buying? That is found from these two plots. The pink color line, it is coming down. What is the pink color line? It is small cap versus large cap. So we can see it is coming down. So small cap is doing poorly from this period. Earlier, it was more or less flat, and prior to that, it was coming down. I have regular webinars on my YouTube channel. In the last webinar that I conducted at Wednesday pre-market, I showed that IWM also had this pattern, that it was underperforming the market, then it was equal performing the market for several weeks, and in recent weeks again it started to underperform. We can see that not using IWM ETF but comparing small caps versus large caps. What does it mean? That means when we found the swing low and market started to recover from Tuesday, we would not look to buy small caps because small caps are underperforming the market. That is one way to decide what to buy. Two ways, right? First, to decide should we look at broad market or narrow stocks, that is larger cap stocks, and then we also look at small cap versus large cap. And then another decision point is, do we buy growth stock or value stock? That is decided from the blue line. The blue line is going up from early June. In fact, earlier it was flat for a while. From early June, it is steadily going up. That means growth stocks are outperforming value stocks. That could also help us to decide to buy growth stocks, where we could buy here, here. Whenever we see the blue line is going up, we try to buy growth stocks. If we see the blue line is coming down, like in this area, then we try to buy value stocks. By doing that, we are aligning more and more and more forces in favor of our trades to give us truly high probability trades.
I have a quick question for you, Sagar. If we're
Yes,
looking to buy growth stocks, is there a particular index constituent list that you would look at for that, or what would be the easy way to find or to run a scan on, let's say, growth stocks versus value stocks?
I use this very powerful Q systems. The data comes from extremely reliable Refinitiv or Zenith. And let me finish my thought on the market
yeah,
breadth.
go
I
ahead.
will keep that very important question in mind, and I will show you how
For
easily
sure.
I can carry out both a top-down or a bottom-up approach to
Sounds good.
find
Thanks,
growth
Sagar.
or value. I will do that. You are welcome. Now, another thing to note, the candle chart here is not really important. The candle chart is for SPY. The important thing is the accumulation distribution count. Now, in my webinar, when this accumulation count happened, accumulation count of 5, that was very close to all-time market high. When large accumulation counts happen near the market top, it it is a sign of bullishness, but it may also be a sign of excessive bullishness. Another thing is the color of the candle. These are cyan color candles here, 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 here. This coloring of cyan color is based on the concept of turnaround day or follow through day as used by IBD, and they are called Eureka. And Eureka concept comes from another group of very professional or semi-professional or very successful traders, HGSI, high growth stock investors. They call it Eureka. So I incorporated that Eureka in this candle coloring. What does it mean? Whenever you see Eureka at the market bottom, you start to buy stocks. And you will buy again value or growth, small cap or large cap, based on what is moving at the present. But if we go back and see the drop in the March time frame due to COVID, at the bottom we are looking for Eureka day, and that was coming with a 6 accumulation count. In IBD term, this may be a turnaround day, and the next Eureka day, which also happened to come with 6, that is the maximum accumulation count, that was also Eureka day, which IBD will be calling follow through day. So you could start to buy here and you could buy even more here. So at the low point of a market, they tell us where to start buying. But at the right age, market is not at a low point. It is at near all-time high. And then we are seeing Eureka days, the cyan color candles, that may be a sign of irrational exuberance. So that may be a reason for caution. That is not telling the market is bearish, it's telling bullish, but too bullish at the market top. That may be a thing to keep in mind. Now, if we now look to buy, or rather say, if we try to buy on Tuesday, which was the swing low. At that time, we would try to buy growth. We would try to buy non-small cap. How could we do that? The key thing is to decide whether and how we identify growth versus value. Now, this is a Q scorecard of all the S&P 1500 stocks. I could also calculate the scorecard for any universe. Usually I use liquid stocks, mid plus high price stocks or mid price stocks. These two lists are my mostly used lists. I tend to avoid buying high price stocks. My account size is not so big. My risk management may go haywire if I suddenly buy a high price stock like Amazon, and most of other stocks are $50, $100, $200. I avoid low price stocks because they tend to be very speculative. If I am trading options, I use a separate list of options which are very liquid in themselves. And if I am buying IPOs, I look at IPOs, not so much my style. Now I could calculate a scorecard for any of these lists exactly like this. And if I am trying to find value stocks, there is a valuation score. I may click some of the smart filters, and with a single click, I have the value stocks. If I also wanted growth stocks, that is earnings per share growth in the latest quarter, I could click another button. Now I have stocks that are undervalued as well as having earnings growth. What if I wanted revenue growth also? I could click another button and I can see the stocks that are having undervaluation, earnings growth, and revenue growth. I call them crown jewels. So if I refresh everything and I just click the crown jewel here, whenever I refresh everything, data comes from cache where it is getting calculated in real time during market hours. If I click the crown jewel, with a single click, I have these stocks: undervalued, earnings growth, revenue growth. So using the smart filter buttons at the top, I can choose whether to buy crown jewels or value plus earnings growth or just value or earnings growth. So that was the answer that I wanted to give, that using the systems I have, using multiple clicks or one click, I can find the stocks based on valuation or earnings growth or both, or revenue growth also. Now I
Very
would
good.
like to, yes, I'd like to go back to my market study. There are a few more things to look at. Let's close the market breadth. We looked at the market ETFs. That's an outward view of the market. Then we looked at internals, like using X-ray or MRI. And now we want to look at technical breadth, because finally we make money buying stocks only if they go up. Now, technical breadth is different from the market internal breadth that I showed just now. And I have to transfer the data with few clicks. Give me 1 minute. Because market closed just now and I was running some programs, scans using Metastock. Now this is a program Q Finder, and here I am looking at technical breadth, very different from market internal breadth. What is technical breadth? Balance between bearish and bullish signals. Let's look at the weekly picture first. The week is just over. We can look at it from different angles. We can look at it all signals. All signals, it's bullish, 58% bullish, 42% bearish. So it is bullish, but not as bullish as QQQ or SPY would make us believe, because 42% of the technical signals, Q technical signals across thousands of stocks, thousands, about 2,500 plus stocks, 42% is actually bearish for the week. So it's bullish, certainly bullish, but not as bullish as SPY, QQQ, DIA would make us believe. Strength signals are very bearish. That is because of a large number of gap downs open on Monday. Now, after that market recovered, trend continuation became bullish, but again, not as bullish as one would believe looking at only SPY, QQQ. And reversals are, of course, bullish because of the recovery since Tuesday. So it is bullish, but not as bullish as QQQ SPY will have us believe. And today was a bullish day. If I now switch to the daily interval, same technical breadth, all signals 74% bullish, strength is also 74% bullish, trend continuation 77%, trend reversal 64% bullish. So technical breadth, we have to say based on this objective analysis that it is bullish. And if we are looking for trades for Monday, or if we had looked for trades just before market close, we had to look for trades in the long direction because technical breadth is bullish. And the market internals may have some reason for overheating, but it is bullish, no doubt about that. And market ETFs are bullish except for IWM. Is there any concern from technical breadth? We had some concern in market internal breadth because of multiple eurekas, heavy bullish days coming at the market top, and in technical breadth also we have some reason for concern. That is the price levels from which the bullish signals are coming. In a healthy bullish move, most of the bullish signals come from price extreme or pendulum medium. But now I see 50% of bullish signals that came today are at price extreme high. So these stocks are already at a high level and they are giving bullish signal. And this high level is calculated over longer period of time, price extreme high. So when most bullish signals, 50% or more, come from stocks that are already at price extreme high, that is a reason for concern. On the other hand, if I look at the bearish signals, only 33% of the bearish signals are coming from price extreme low. So of course, it is nowhere close to being oversold, but it is little bit overbought. From what angle? From technical breadth angle. So it is bullish, but there is some overheating, signs of overheating. So we looked at market so far from market ETF angle, market internal angle, and technical breadth. And now we are going to look at it using sector industry breadth. That is the fourth angle. This is a very useful plot that I use every day, even in real time. This shows the sector advanced decline, industry advanced decline, and stock advanced decline breadth, right from real time to 1 day to 2 day to 5 day, 10 day, and 1 month period. If you are watching my YouTube sessions, then you would know that 1 day and 2 day periods were flip-flopping, and even now they are flip-flopping between green and red. And while that was happening and that is happening, the red color is propagating gradually to the higher intervals, 5 day, 10 day, and 1 month. A couple of months ago in my webinars, week after week, I showed that the 1 month was always green, majority green for sectors, industries, stocks, for week after week after week. But that is not true anymore. As of yesterday's close, this monthly calculation is as of yesterday's close. If I run it again, I am not going to run it again. You can see I paused it because I'm running the webinar. As of yesterday's monthly period was red, 10-day period red, 5-day red, 2-day balanced. Yesterday was actually bearish. This is important to note. If we just look at SPY, QQQ, they were going up, but under the hood, in terms of sector, industry, stock, advanced decline breadth, it was actually bearish yesterday. Today is of course very bullish. It seems today's bullishness has recovered from yesterday's bearishness. So the 1 day, 2 day period is continuing to flip flop. The summary of this plot is that for swing traders, it is not so easy as it was a couple of months ago. Now the 1 day, 2 day periods are flip flopping between red and green. So one has to be alert to buy at the support. Just like market started going up from support trend lines on dia SPY QQQ on Tuesday, one has to be alert to capture those days and quickly book profit once the resistance is covered. So one would have booked profit by today. So far, for several weeks, they are flip-flopping. That's why one need to book profit quickly from short-term trading. And longer term is not as bullish as it was earlier. So sector, industry, stock, advanced decline breadth is again showing that the SPY QQQ, looking at only those or even dia, is misleading. It's not as bullish. It is bullish, but not as bullish as them. Now, another last angle I'd look to use to look at the market, that is the bucket analysis. If we took all the S&P 1500 stocks, calculated their normal range based on Bollinger Bands, divide each stock's Bollinger Band into 10 equidistant buckets, 1 to 10, and drop them in the bucket depending on where they are. So if a stock is at the highest band near the or at the upper Bollinger Band, we will drop it in bucket 10. If it is at the lower Bollinger Band, we will drop it in bucket 1, and so on and so forth. 10 equidistant buckets. And some stocks will be above upper Bollinger Band. We'll drop them in greater than 10 bucket. Some stocks will be below lower Bollinger Band. We'll drop them at less than 1 bucket. And then we'll calculate the number of stocks in each bucket and calculate a percentage, and that gives us the bucket percentage analysis. Again, this is like with every other Q components, this is also calculated in 100% real time. What is the bucket analysis telling us? If we look at the red, that these are the stocks below the midpoint of the Bollinger Band. The area of the red histogram is in fact larger than the area of the green histogram, showing that bucket analysis wise it is more bearish than bullish. Not extremely bearish, but it is more bearish than bullish. And we can also see that from the pie chart here, percentage of stocks in aggregate above midline of Bollinger Band is 45%, which is below the middle point of 50%. So more stocks are below midline of Bollinger Band. From that angle also market is bearish. Not anywhere close to as bullish as SPY QQQ dia would have us believe. It is in fact bearish in terms of the actual number being 55% below mid Bollinger Band. How to use the bucket analysis? And there was a very useful demonstration on Monday. Bucket analysis I used to look at extremes. So when the percentage of stocks in the less than 1 bucket or the greater than 10 bucket, it goes unusually high. What is the unusually high percentage? 30, 40% or more. Then we are closer to a reversal. And that was in live demo mode on Monday. On Monday, and I tweeted about it on my Twitter page, this percentage of stocks below lower Bollinger Band in aggregate, it became extremely oversold. It fell to more than 50%. That is very, in several months now, that has never happened. It has sometimes gone to 20% or so, but more than 50% of S&P 1500 stocks went below their lower Bollinger Band on Monday. So we could expect a recovery from that point from bucket analysis perspective. And the other reason we could expect a rebound was because several market ETFs were at trendline support, and that indeed came true. Now the percentage of stocks in the lowest bucket is only 2.1%. So it's not oversold anymore. Is it overbought? Nah, not overbought, because the percentage of stocks in the most extreme bucket, upper bucket, is only 12.3. It has to go to 30-40% or so to think that it is overbought. So from bucket analysis point of view, it is bearish, but it is not oversold. And if the market continues to go up, it has further way to go before it becomes overbought from bucket analysis perspective. So we looked at market now from many angles. Let's summarize. Market ETFs, we have to say it is bullish. Market internals, we have to say it is bullish. Some sign of overbought condition because of Eureka coming at market top, but it has to be bullish. There is no other conclusion. Technical breadth, bullish, but some sign of concern is there. Bucket analysis is actually showing bearishness, and the edge sector industry stock advanced decline breadth is bullish, but if we look at today's picture, bullish, longer picture not so bullish. So that is happening because of flip-flopping in the market in average stocks while the market ETFs are going up. So still, if we have to take trades, probably we should take only in the long direction. There is no rationale to take trades in the short direction under the current situation. That was the market analysis.
That's really, really good. I know one of the things that you look at quite a bit, Sagar, and this may be too big of a question to ask, and if it is, that's fine. But I know that a lot of what you look at is seasonally based. Right here, well, at least here in the U.S., it's July right now. Summers generally tend to be a little bit slower. What do you think is your seasonality telling you? Studies telling you that it's going to be? What is that? What is it kind of adding to the picture? If I can ask that question, and like I said, if it's too far off topic, tell me.
No, I have all the tools handy. I look at seasonality. Seasonality is not a deciding factor in itself because technicals trump seasonality, but I do keep an eye on seasonality. And while I was saying that, I looked up the seasonality of S&P 500 ETF SPY. This tool allows me to look at, in fact, all the Q tools I can use in any country, any market. Let's use it for SPY. I am looking at the seasonality of the current month in this purple color, and it is in yellow color. April has very nice seasonality. 79% of the times April is up for SPY, but July is yellow. That's what Jeff just mentioned for everybody's benefit, that July has no seasonality. To have seasonality as a factor in trading decisions, we should have seasonality that is closer to 80% or more. Now, SPY is an average of 500 stocks, so we may be a little bit relaxed on it, but in individual stocks, we look to buy stocks only if seasonality is more than 80% or around 80%, but may not be a deciding factor in itself. Anyway, I came here to show that SPY doesn't have bullish or bearish seasonality. It's neutral, neither here nor there. The next bullish seasonality period is in November. That is a bullish seasonality period, and we can see from September to October to November it is improving. So probably sometime in October we could start to look into buying, and that is maybe a common factor across the board. Let's look at QQQ, and I'm using up to 50 years of data to calculate seasonality decided by this parameter. I could reduce it, but let's use 50 years data. It's quite fast. Here, July seasonality, if we compare with SPY, QQQ has a little bit better seasonality. You can see it is in green color. In SPY, it was in yellow color. That may also be a reason QQQ is going up more strongly. But still, it is nowhere near 80%. The next bullish seasonality is in November. Again, like SPY, it is improving from September to October to November. So we could start to buy somewhere in October if we are using seasonality. Now I could look at the other market details, but let me do one more thing. Let's look at all the liquid, let's say the mid-price stocks. What I am going to do, I already showed you how I can calculate undervalued stocks. Let's look at that plot again. What is in vogue now? We saw the growth versus value, blue line is going up, so growth. So let's look at growth stocks. So I'm calculating now. Nothing is stored on my computer, everything is being done in real time. So for this 1791 mid-price stocks, okay, some issue with server connection. Let me pause and play again. If because of internet connectivity or something, server is not responding, I'm in Thailand, maybe something is getting lost in the middle in communication. I just pause and play. So it is connecting to Refinitiv server and calculating, getting the data, and then it will calculate the scorecard. Give it a few seconds, hopefully.
While we're waiting, I just had to say that I didn't know Excel could be used so well. Like these spreadsheets are very well designed. They're not. I mean, if you look at the spreadsheets that I come up with, they're functional, but they're not pretty. You've done a really good job designing these out.
True. Because usability is very important for an active trader. Usability. If we spend too much time figuring out what is going on, the trading opportunities will go away, or will give up spending too much time, take suboptimal trades. Now I had a message on another monitor saying that Zenith is that's the Refinitiv server is having some issue. No problem. Let's, instead of using that list of stocks, let's use the S&P 1500 stocks. I don't know, server is having issue. I don't know if I'll be able to calculate the seasonality, but let me explain what I was trying to show. So this is the list of S&P 1500 stocks. These are the stocks. I clicked some button to get all the growth stocks. Now I'm trying to calculate the seasonality of all the growth stocks. Let me open another program for that. The last tool that I showed you, Season, that allows me to look at seasonality of one instrument. But now what I'm trying to do, I have the list of all the growth stocks in the USA market. I'm trying to calculate seasonality of all of them. So using a single click, I transferred them, all the growth stocks, from one program, QH, that is the sector industry rotation analysis, to seasonality. And it may or may not, okay, let's see if it is able to calculate. On another monitor, there was one alert from Refinitiv. The way it works is, if it is able to connect, usually it can, then it will calculate the seasonality, and then I will have a table with all those hundreds or thousands of stocks. Then I could filter out the stocks with the best seasonality in July, or if July is coming to an end, I could look for stocks with the best seasonality in August. That way, I'm combining the current in vogue stocks, that's the growth stocks, and then trying to find out the seasonality of those stocks and aligning seasonality also. And it seems there is an issue with connection, no problem. But that's how I will use seasonality as an additional layer, like icing on the cake, on top of my technical and industry rotation, sector rotation analysis. Oh, it's successful, great. So now let's do this. See, these are all the growth stocks, and let's click the 10 button so that I only look at stocks with at least 10 years of history. Now July is coming to an end. Let's look for August bullish seasonality. Only two stocks have very bullish seasonality, more than 80% in August, in this list of growth stocks. And if I relax the criteria a little bit, go to up to 70%, then we have a couple of more stocks. Let's see VC. If I want to see detail of VC, let's look that up. So this stock in August, let me point out to the different insights. In August, it has bullish seasonality of 80%. So it has 10 years of data. Out of those 10 years, 8 years were up, 2 years were down. That gives us a seasonality of 80%. Average up for the 10 years is 4.5%. For the years when it was up by on average 8.7%. For the years when it was down by average of 12.1%. And sometimes it went up by 8.7 or 41.9% even. So sometimes it can go up a lot. This stock is VC. So it has great seasonality. It has good earnings growth. Now let me do one thing. Let's calculate the complete scorecard of VC using the PR analysis and fundamental analysis program. Let's see. So I clicked one button, the symbol is transferred to the vital program. And now what I can see, the valuation is medium, but it has high earnings growth, accelerating earnings growth from the previous quarter. It has slowly but increasing but increasing revenue growth for last 3 quarters. And if I look at the plots here it is EPS plot from current quarter Q0 to Q-7. So 8 quarters of data. I can see it is positive, negative, positive. In fact, there was a dip here. EPS was minus 1.44. Otherwise, it was positive. And this line is showing not the EPS, but year-on-year earnings growth. And that is nicely going up. In the last quarterly result, the year-on-year quarterly earnings growth went up by 900% and it was positive. And revenue is also one important thing that people look at. Revenue is steady. There was a dip in this time. Maybe because of COVID, I am assuming it is auto parts and equipment industry stock. So this dip was probably due to COVID, and since then you can see the revenue growth year on year is also going up. So not only the revenue is improving, revenue growth is also going up. Now, if I look at the earnings quality, because it is earnings season, the next earnings is on 29th July, you will find everything that a trader needs and only what is one needs here. Okay, some excess things are there also to show us what not to use, but because it is earnings season, we can look at earnings quality. If we are at all going to buy a stock before earnings, it has robust earnings quality. Now these are what I call Q360 degrees view, looking at technical, seasonality, fundamental, industry strength. I have not looked at industry strength yet for this stock, but I look at that. Okay, let me look at that. So I click one more button. The industry is auto parts and equipment. So from fundamentals point, I am okay to buy. It is having high earnings growth, medium valuation, great earnings quality, some revenue growth. Let's look at its industry. And I look at the industry from a graphical form first. I'm a visual trader that makes decision making easier. So I clicked one button and let's look at the industry. Primary industry is auto parts and equipment. Secondary or alternate industry, auto, truck and motorcycle parts. Both of them jumped today. And this is a real time versus 1 day versus 2 day versus 5 day. So it jumped industry score today from 17 to 124. This tool has 147 industries for the USA market. Alternate industry score also jumped, and we see the percentage, absolute percentage is also up by 1.5% for the whole industry. That is a significant jump. Now, if I look at the rotation over longer period, see how the industry was weak earlier. As I mentioned, red magenta is weak. So the industry as a whole was weak. And what is it showing? The industry rotation score real-time period, 1-day period, 2-day, 10-day, 5-day, all the way to 12-month period. So it was very weak from month 7 onwards, tried to improve, weekend, and today it jumped up. So that is a reason to start to look for buy setups. And the pace column is showing not the strength. This core is showing strength or weakness, cyan is strength, and pace is showing acceleration. So auto parts equipment today became very strong with high acceleration, 138 out of 147 industry. Just the color is enough. And if I go back to the stock scorecard here, in fact, from here also we could see today 79% of 29 PR stocks for this company, they went up, they are bullish. So last thing we may do is look at its charts. So let me close the existing charts. I can come back to Vital, click the chart button here to open the stock with Q charts. Let's open with daily first. Now, technically, I don't have a proper buy setup because it has trend line resistance, no trend line support, still coming down, multiple trend line resistance. So this is a stock that has good fundamentals. Industry improved today, but this stock is not giving a buy setup. Now let's do one more thing, because we saw the industry suddenly strengthened today. 80% stocks are up. Why don't I look at all the PR stocks? These are all the PR stocks. Start with Crown Jewels. No Crown Jewel in this list. Then go to 3-star. I have number of stocks that are 3-star that is having both undervaluation and earnings growth, and several of them went up. Let's look at them. Let me close VC chart again, open all these stocks that went up, and let's see if we find a buy setup. And one important thing that I mentioned in the last webinar also, market is going up at or near all-time high, and we are looking at stocks in the strongest or near strongest industry, very strong fundamentals, and then looking at technicals. And if we don't find a good buy setup, that's a 360-degree trade looking at all angles, that's a way of the market telling that don't be fooled by SPY, QQQ making all-time highs. Every stock is not going up, and you have to be very careful about buying stocks. Okay. Some connection issue. Let me try to open few at a time. AXL. Okay, let me open from here. Local data. Here. Again, a stock. This one is better position to buy if it goes up. Okay. This is offline data. Sorry, it's not including today's data. I have to open again from real time. Yes, AXL. Okay, this is real time data. It has nice trend line support. So this is better than the other stock we saw in the same industry. It has a support point. It has very strong fundamentals, bullish shape candle. If one thought of buying, one could put stop just below the trend line support, but it has no clear space above. It has trend line resistance. So that's what I mentioned earlier. One has to be nimble. If one thought of buying today, one has to book profit quickly. Not the best setup. Let's go back to Vital, see any of the other stocks gave us a good setup or not. And let's look at only stocks that went up by at least 0.4%. And I'm opening multiple stocks at one time. This is ADNT, no buy setup. It has trendline support like the other stock, like AXL, but it is in a downtrend, has trendline resistance. So I close this. SMP, downtrend, many trendline resistance, coming down, no buy setup. Next stock. This has trendline support, but still coming down in a downtrend, not a stock to buy right now. TEN, downtrend, has trendline resistance, not a stock to buy. LKQ, this is better. This is better because it has trend line support. But the buy point would have been this day when we had the bull release with a bullish shape, bullish color candle. That would be Tuesday. So what I mentioned earlier, on Tuesday, on Monday market close, we had trend line support. We had this huge oversold condition in bucket analysis. So Tuesday we could start to look for buy setups, and we could find this stock LKQ, that is fundamentally strong growth stock going up from trend line support, and then we could try to book profit quickly. In any case, this exercise showed, just like I showed in the last webinar, the Wednesday pre-market webinar, that though SPY, QQQ are going up, when we look at individual stocks, though they are fundamentally strong, though they are in relatively strong industries, it's not easy to find low risk 360 degrees buy setups. So one may be cautious. One may still buy stocks like Facebook. Okay, let me just spend few more minutes to look at Facebook.
Okay, for sure.
See, Facebook on Monday came near support. Tuesday went up with a bull release signal with a bullish shape candle. The color changed from bearish red to neutral yellow. So one could think of buying Facebook on Tuesday. Not today. Today it is. I'll come back to today. There may be a way. Remember, I mentioned if something breaks out with a gap up, we may be able to buy. I'll come back to that. But for buying swing lows, the opportunity would have been on Tuesday. Now, is it fundamentally strong? And here I wanted to look at Facebook. I mentioned to Jeff earlier that I would like to see Facebook to clarify one thing, that a stock at or near all-time high doesn't mean it is overvalued. The overvaluation, undervaluation has to be based on the stock's own performance and also relative to the peer stocks, and see the valuation score on Q systems. For Facebook, it's at all-time high, but it is undervalued. Secondary valuation is also undervalued. It has fantastic earnings growth for 3 quarters, 3 years. It has fantastic revenue growth for 3 quarters, 3 years. And these are the Q views. If we look at the revenue, even year-on-year revenue growth steadily going up. Year-on-year earnings growth steadily going up. Price steadily going up. Makes good money, earnings per share. Earnings is coming near by 20th July. Now, all these things that I showed, they are the Q view, this and this. But I also incorporated what I call outsider or external view. And some of these are more important than others. One important aspect is, what are funds doing? Funds are in fact pouring money into this. Again, just look at the color, green or cyan is bullish. So the external view, this is the most important of the external view for my trading. Fund is, because they are the people who are risking money. So they are bullish on the stock. Insiders, they may buy, sell for many reasons. It's anyway neutral. Analysts are very bullish, and overall rating for the stock, aggregate rating from all the analysts is buy. Now, my experience shows, and you also know, that the analyst rating and overall rating is not that important, but this fund is important. So from valuation angle, earnings growth angle, and fund, the 3 important areas, earnings growth, revenue growth, both, it is strong. And if I looked at its industry, not sure if industry is strong. If industry is not strong, it will also show that we have to be very picky about stocks. Not every stock is going up. Let's look at the industry score. Well, industry is strong, 146 out of 147. So it was strong, and it improved further today. Everything is real time. The industry, that is interactive media and services, went up by a massive 2.9% today. And if I look at the rotation from real time to 12 months all the way, it is gradually getting bullish. Second strongest industry today. but it was strong earlier also. So we could buy stocks like Facebook on Tuesday based on the technical. If we look at again Facebook, and Facebook is a great example. It had a very nice trend line support, had a bull release signal, had the yellow direction line support, color change to neutral, industry rotation, fantastic, fundamental from every angle, great, fund ownership, great. And I would like to now show you the seasonality also. This month we saw is not great for SPY or QQQ, but look at Facebook's seasonality. All these were with us at the close of Monday, and we could decide to buy the stock on Tuesday. If seasonality program allows me to connect to Refinitiv, you will see the July seasonality is better. Maybe not greater than 80%, but better than many other stocks in July. So I found that interesting that from all angles, Facebook was a buy on Tuesday. That's what I call 360 degrees analysis. And if you continue to carry out this kind of visual analysis, choose the best of the best stocks, then you will find trading more rewarding probably. Okay, I'll not wait for the data to come in. Let me pause. Sometimes pausing and playing again helps. Yes, this is what I wanted to show. See the July seasonality, much better than almost 80%, you can see. And for the months that are up, in fact, out of 9 years, 7 years up, 2 years down. For the years when it was up by 14%. So far it is up by 6.4%. So if you compare, it has more way to go. August also has more bullish seasonality than SPY. So we'll see how Facebook does. But the buy point was Tuesday. Tuesday's open. Tuesday's open. Do I have 3 more minutes, Jeff?
Yeah, absolutely. Sagar, you can take as much time as you want to.
Okay, I wanted to answer the other question that Jeff asked earlier, very important question. Is it possible? It's not only if I take it or not, is it possible to take a breakout trade with a low risk entry? And again, you can see my connection is having some issue, but see Facebook gapped up today, cleared the trend line resistance. So it was a breakout and a gap up at the same time. And as I mentioned, on those days, we may switch to intraday time frame, and I switched to 10-minute time frame. And how am I changing so fast? Let me change the color. I have set all the important Q templates on the custom menu bar. MetaStock allows you to design a custom menu bar. So I'm just clicking on the appropriate option depending on what I am looking for. So see what happened today for Facebook. Price open, and then it created the early range high, early range low. It was a gap up and it was a breakout on daily time frame. Then in my guideline, there is a technique that fundamental great, industry great, even seasonality great. Technically, I have a breakout with gap up. Buy the stock if it goes above early range high. And in MetaStock, I can change to 5 minutes. In the morning session, I use 5 minutes. In the afternoon session, 10 minutes. So let's switch to 5 minutes. Right on this candle, this would be the buy point for Facebook. And as I mentioned, because I have a gap up and a breakout, the stop could be placed just below early range low. And if it was an intraday trade, one could book profit once the risk distance was covered at one of these dynamic pivot lines. So one could book partial profit here, and the remaining position one might hold till the day's close. And sometimes what I do, if I'm trading this with stock, I book the entire profit in the stock and use part of the profit to buy maybe call verticals or calls. If it's too aggressive, usually I don't like naked calls, but I may buy call verticals. That's one technique. But anyway, I came here not so much to discuss the instrument choice, but how we may use the breakout and a gap up to take a very low risk entry using this early range breakout technique. I remember that question Jeff asked, and this is how sometimes I do take breakouts, but I use the intraday time frame to keep my stop narrow. Well, that was a view at the market and at sector. Okay, I didn't see the sector so much. Then why don't we do that? Just because I remembered this, and Jeff is allowing me to spend some more time. It's important to look at the market from different angles. We saw QQQ is super strong, but let's look at the sectors. And this is a sector rotation from right today, real time, to 12 months. And let's look at the sectors. What are strongest sectors today? It's not infotech, whereas QQQ is super strong. Infotech is strong, but that is the third strongest. How does it help us? If I'm doing top-down analysis, I may actually look for utilities industrials to buy before going to infotech. Which ones to avoid? Energy, financial, real estate. You may note that utilities defensive at the top, real estate defensive near the bottom, financials, energy, non-defensive at the bottom, infotech, industrial, non-defensive near the top. So it's a hodgepodge of defensive, non-defensive across the spectrum. But if I'm using top-down analysis, I may look to buy utilities industrial, not be fooled by QQQ and look for infotech first. Go into the industries. I'm drilling down into the industries of only these two sectors. I'll not do the complete analysis. Now, there are many industries in these two sectors, but see the cyan colors. I'm interested to buy only on those industries. So let's choose this. So top-down analysis. And if you see, they are in industrial utility, the sectors we selected. Now I'm going to the stocks in these industries. I'll not complete the full analysis, but I am demonstrating the approach that is very effective. So I have a stock list from all the strongest industries in strongest sectors. I'm looking for crown jewels first. Several of them went up. 4 of them went up by more than 1%. If I don't find a trade from there, I'll relax the criteria from crown jewel to 3-star. Now I have more stocks that went up by 1%, or I may go up to 1 star. What is 1 star? Is either undervalued or having earnings growth. And you can see several stocks went up. Restoration Hardware came to the top, by the way. And if it's a well-known stock, so let's look at Restoration Hardware. It had a gap up move. It's earnings session. So I'll not like to buy so big gap up. In any case, I demonstrated how to do the top-down analysis, and one important point is, though QQQ is super strong, today's strongest sectors are industrials and utilities, not infotech. So you may keep that in mind in your choice of which industries and then which stocks to buy. Well, I think I overshoot my quota.
Well, yeah, no, that's okay. Like, we do have one question, and I think this is a really good screen to answer that. Raja in YouTube wants to know how pharma looks nowadays, and just looking at this, I think it says the whole thing. It looks about middle of the road to me.
Let's look at that. Now, one important, that's a very nice question. See, it's healthcare. The sectors are too broad. I often say that sectors may hide the strength or weakness of individual industries. So consumer discretionary, for example, it has apparel retail, it has home building, it has automobile manufacturers. Apparel retail, small scale items, housing, cars are large ticket items. So they may not move together. If we look at materials, materials has gold, it has wood or forest products, it has steel, they don't move together. So if I just look at the sector, I may miss the movement in the industry. So healthcare, why don't we drill down? Yes, healthcare is in the middle if we see today's data. Healthcare, I think that's a very nice point to keep in mind. Healthcare was weak for a long time. So let's look at healthcare. What are the strongest healthcare industries today? If I'm going to buy, I'm only going to look at healthcare services, life sciences, tools and services. They are relatively strong. And Jeff, you see how the sector was hiding the strength of these two industries. So now I could just select them and drill down to underlying stocks, and then I'll again go through the same step. Try to find crown jewel or 3-star or 1-star. If I find fundamentally strong stocks, I'll not complete the analysis. I'm already over time. But see,
Yeah, you're
once I find some stocks, then I can look at the technicals to see if they are strong.
Raja had a follow-up that I just think we can speak to. I'm gonna excuse me. Raja had a follow-up that said, if the prices are too high, he was talking about pharmaceuticals being very high. How do you justify if the stock prices are very high? And so does that kind of count into your valuations? If like the stock is at all-time highs, is that something that you look at as being maybe too expensive, or something that you calculate in? How does that fit into kind of the calculations you do?
That's another good question, and I make the distinction. I showed this example of Facebook, if you remember. Facebook is at all-time high. In fact, I think today it crossed 1 trillion valuation again. It's at all-time high. Does it mean it is overvalued? No, it's actually not overvalued in terms of fundamental. It's at all-time high. If I look at the longer term, here I am looking at 4-week, 2-week, 1-week, 1-day period. It's clearly at all-time high. If I just use that factor to decide if a stock is overvalued, that is misleading. Technically, if you say, it may be appropriate to say that it is overbought, but if I look at fundamentals, it is not overvalued. In fact, it is undervalued, and these are very strong stocks. A stock that is undervalued at technically high price level, these are very strong stocks, and I always advise never try to short these stocks. If a stock is showing undervalued, and this again, this undervaluation, overvaluation, cyan is undervalued, not based on the stock's price only, but based on how the stock is performing and comparing it with its industry peers.
Yeah, I agree with you completely. I can't tell you how many times I've said that stock can no longer go any higher because it's at an all-time high. And I can't count the many times that I've been wrong. They can, like once they start to kind of get going in the right direction, there's a momentum factor that you need to keep in mind too.
True. And again, we have to make a distinction, at least I make, between technicals and fundamentals. Technicals don't show the fundamental. They don't show dividend. They don't show earnings growth. Don't show revenue growth. So technical overbought does not mean fundamentally overvalued. So that's why I use 2 dimensions distinctly. One is the valuation that is based on fundamentals, and then technicals I look at for technical overbought or not.
Raja, that was a great question. Thanks for asking it. Sagar, let's go ahead and tell the people how to get it, how to get in touch with you again.
Sure. Let me put this slide up. You may contact me using the email ID tradingprofitably@gmail.com, and much of what I discussed today, they are explained in more detail in sagarnandi.com. All the resources there are open to the public for learning purposes. Feel free to use them, and if you have any question, anything, you may contact me using my email ID. And by the way, I share live market and stock analysis just like I did today, both on my Twitter page and YouTube channel. All are open to the public, and it's my pleasure if you have a look at it, and if you find any value of it, it will be worth my time to post the things in Twitter and YouTube.
Sagar, thank you. That was really, really good. I'm going to start calling you Mr. Excel Wizard. It rolls off the tongue, I know. That was really good, though. Thank you for coming in. Thanks for spending some time with us. I feel enlightened. For the audience, thank you for coming today. If you enjoyed it, hit that like button. Go ahead and subscribe to the channel. We appreciate that. If you don't like it, hit the dislike button. You can check us out at metastock.com. Thanks for coming. Have a great weekend, everybody. Stay safe.
Thank you, Joe. Thank you, everybody. Take care. Bye-bye.
Okay, thank you. Stay healthy, everybody. We'll see you at the next one.